Welcome to the Millennial Crypto Academy. In this short preview video series for the MCA, you're going to be learning how to trade cryptocurrencies and make money from trading. In today's video, we're going to talk about the fundamentals. Why is cryptocurrency completely changing the world?
Bitcoin.
What the hell is it?
Bitcoin is better than currency.
There's a big industry around Bitcoin.
Bitcoins is a remarkable cryptographic achievement.
It is a huge deal. It's a huge, huge, huge deal.
It's not just crypto that is changing the world, but the blockchain technology that is underlying the cryptocurrencies. Cryptocurrencies are made from the blockchain, but blockchain can be used for many other things. Now, blockchain is sort of a ledger system. It's created of blocks and made in chain, and a block is a piece of data. And again, I don't want to get into how the blockchain works because it's a little bit complicated and I don't really understand it completely, but feel free to go watch some videos how the blockchain works. What we're going to be talking about is why it's potentially the best thing to be trading and an asset class that will be worth a lot more in the future than it is today. So today we're going to talk about those fundamentals. Now, blockchain has been, or not blockchain, Bitcoin has been compared to a bubble. You know, Bitcoin is a bubble, everybody says. And really, actually, Bitcoin is more like a response to other bubbles in the system that we've currently got. Now, in this Twitter post by BM Bernstein, who's also worked at all these trading companies and these hedge fund places, he says that there are other bubbles that are existing right now, things like the housing bubble or the debt bubble, things like that, where debt is continuing to rise, credit bubble, credit is continuing to rise, things like that. And Bitcoin is an asset class that has been created to replace the broken fiat system that we have today. So it's not actually a bubble, it's just increasing so much because the demand is so high for it. Thomas Lee talks about Bitcoin as well, and this is what I really want to get into. Thomas Lee talks about the millennial phenomena. You can watch the entire Thomas Lee talk. Thomas Lee is a research expert. He's worked for Solomon Brothers, JP Morgan. He started his own research company, and he talks about how millennials are going to be driving change. And the reason this is happening is because millennials don't trust banks. I'm a millennial, you might be a millennial, and we don't trust banks. 92% in this study of millennials don't trust banks. That's what Thomas Lee found. And I personally I see that, right? Cryptocurrency is completely decentralized. Well, most cryptocurrency is decentralized, meaning it lives on the blockchain. It lives on everybody's computers. It doesn't have a central system. It doesn't have a central bank. Again, I don't want to get into the technology of it. I just want to talk about how this millennial phenomena is going to occur. So let's talk about this a little bit. Thomas Lee talks about how each generation saw innovation. So let's talk about the baby boomers. In their 20s, which is 1970s to 1980s, that's when PCs started to come into play. Apple computers, Microsoft computers. This was completely disruptive and misunderstood by previous generations. Now, that is a theme we're going to go off here. Disruptive and misunderstood by previous generations. What about Gen X, which is the next generation in their 20s? And again, in their 20s is the time where that generation is entering the workforce and really affecting the economy. That's why we're talking about that. For Gen X, it was mobile phones, email, text, Google, Wi-Fi, things like that. These technologies were, again, disruptive and misunderstood by previous generations. If you're a millennial right now, you know this by the amount of times your mum has asked you to tell, how to drag and drop or how to use her phone or something like that, right? It's misunderstood by previous generations. Now, millennials are in their 20s. The year 2000 to about now. Millennials were born in 1981 to around 2004, something like that. Again, it's around that area. It's never an exact science. Millennials in their 20s, what are millennials experiencing? Facebook, Uber, Airbnb, Instagram, Kickstarter, these and things like the blockchain. That's what we're talking about today. Online dating, electric cars. Any of these things, if you're a millennial, you're probably thinking, yeah, these are cool. I'm down with that. I'm down with Facebook posting or online dating. But these technologies are completely disruptive for the previous generation. Again, misunderstood and disruptive for the previous generation. If this is the case, and blockchain is a part of this millennial phenomena, then blockchain is an emerging asset class. And because it's a store of value, it's somewhere to keep money. You know, you put money in, you take money out. It's a store of value. Because of that, it can become a store of wealth for the millennials. So where is this generational cycle? The millennials right now, the average millennial is 26. I'm 28, 100% millennial. And millennials are entering the workforce. And as Thomas Lee explained, they're starting to buy cars, right? This is the time where they start to buy cars, which means they're taking out their first loans, their first loans to buy a car. My little brother, he pays for his car on finance. That's what people are going to start doing. Housing, even if you're renting or paying for a house or putting down a down payment in your 20s, you're adding to that sort of housing cycle. So the millennials are going to start to affect the housing cycle. That's the next 10 years. What happens in the next 10 years after that? It's called the investment or business cycle, where people have saved up enough money in their 30s and 40s and they want to put it into an investment. Where are they going to go? It's not gold, it's gold 2.0. And I didn't make up that term. That was the Winklevoss twins. They called Bitcoin Gold 2.0. So the millennials are going to be going into Bitcoin and using that as a store of value. That's in the next 20 to 30 years. Bitcoin rising in 2016 from $1,000 to $19,000, that perfectly ties in, got flies all over me, that perfectly ties in with the baby boomers, with the millennial generation entering the workforce. So as soon as they enter the workforce, they're starting to make a little bit of money. Where do they put it? They put it into Bitcoin. In cryptocurrency, at the current moment, every $1 billion that goes into cryptocurrency becomes 25 billion in appreciation. If the millennials put in 10% of their savings, just 10%, which is 100 billion, into cryptocurrency, that's 2.5 trillion rise per year. Crypto becomes a $500 trillion market cap with, at the end of this cycle peak, where the millennials are leaving the workforce in their 50s, 60s, and 70s, one Bitcoin can become as high as 10 million per Bitcoin. Now, if you want to look at these numbers, again, I know these seem astounding, but check out the full Thomas Lee talk where he talks about it. The Fed has said it's become a viable asset class, and if Bitcoin becomes a store of value for just 1% of the wealth of the millennial generation, that's still $150,000 per Bitcoin. And you can see why I am long Bitcoin, right? You can see why I'm talking about how crypto can change the world and why I'm here talking to you about this. So why does Wall Street care? And Wall Street is really big because they're the biggest people who invest. They're the whales behind these big changes. So the simple reason is there's tons of money to be made. Coinbase is where you can buy cryptocurrency. They're already a $600 million company, right? That is a big deal. $600 million. That's a lot. There's tons of money to be made. And already the big banks and the investors have started to invest or build gateways into crypto. It's very good to diversify with Bitcoin and crypto because it's unrelated. It's uncorrelated to other asset classes. It doesn't matter whether gold's going down or stock's going down. There are many cryptocurrencies which are still going up, which means it's uncorrelated. It's a great way to hedge your bets, to diversify, and to reduce your overall portfolio volatility. But let's talk about volatility. Why do I love Bitcoin so much? Well, it's because it's a trader's paradise. It's so volatile that you can make so much money just today. It moves up thousands and down thousands in a matter of days. And although it's not on the horizon yet as being used as a currency where you're buying a Starbucks or you're spending money on Amazon using Bitcoin, it has become an asset class much like gold. It's a commodity, basically. It's become a commodity. It's similar to a commodity in that it's limited. There's only a certain number of Bitcoin. It's mineable. You mine it. You get rewards for mining it. And it's all done on computers, of course, because it's digital, but it has that same similarities, and millennials will start to see it like that. So I started trading cryptocurrencies because I wanted to learn how to trade. I wanted to start owning stocks in things like Starbucks and Amazon and all these companies that I love. I want to own a piece of that company. And I never knew how to do it. So when I found cryptocurrency, I was like, I got to learn how to trade this stuff, and that will help me learn how to trade other things. But now I'm mostly just cryptocurrency focused because I really feel like cryptocurrency is the future and blockchain technology is the future. And if this happens to lead me into stocks and shares as well, even better. But that's that's the fundamental video I wanted to share with you. That's the first video in this training series. Feel free to subscribe for more. We've got, I think, 8 videos in this free training series. We've got downloads, Facebook group coming for the Millennial Crypto Academy, the MCA. So thank you so much for watching. You can see my passion behind this. I really believe in the blockchain. And if you want to go check up those numbers that I quoted, Thomas Lee, you want to check up, all the numbers that I said, feel free to go do your research. But there is a problem here. The market is designed to take as much money from as many people as possible in as quickly of a time as possible. So knowing this is why people think trading and investing is so dangerous. It's like gambling, they say. And the real problem is you're being lied to constantly. You're being scammed by the media. The media tell you when it's going to go really high. It's Bitcoin's to the moon. And then they tell you when Bitcoin's a bubble and it's going to crash. And not only are you being lied to by the media, but your own emotions are lying to you as well. Your emotions tell you to buy at the tops and to sell at the bottoms. And even if you know that's wrong, your emotions in the moment will tell you the wrong thing and you'll make the wrong decision. So that's what I want to tell you about in the next video. I'm going to tell you about the lies that you're being told by the media and by your own psychology and how to overcome them. So check out that video in the next video in the training series. Subscribe below to this channel and join the Facebook group MCA so you can be a part of this new incredible community.